The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority podcast. Good morning, everyone. It's Bakes, Kevin Baker, the Stock Market Authority here at Studio 21 in wonderful Salem, New Hampshire. Hope you are great. Hope you're getting ready for a great 4th of July weekend. Today we're going to talk about economists can't pick stocks. They still can't pick stocks. I know I've talked this before, but the last week got me so worked up, I got to bring it up again, and I got to tell these guys, please learn how to read a damn chart. We're going to go to the mailbag, and we're going to talk about Johnson Controls, Ford, and Tesla. Yes, 2 car companies, but I think it's germane. We're going to go through the Stock Market Authority portfolio as I show you my search for the 10 best ETFs so that we can make money in total every single year like we did last year, up 6% plus when everybody lost 20 plus. So please stay tuned. But today's top story. Economists can't pick stocks. I'm sorry. Economic news as far as making money in the stock market, ETFs, investing, it just doesn't work. And if you've got an exception, please bring it. But, I've been doing this a long time, and I see this over and over again. And that's why the subtitle is I implore people, economists too, to learn how to read a damn chart, because the market is very, very smart. It's the distilled wisdom of millions of people, millions of investors, trillions of dollars, millions of computers, and price is what matters. And it's mind-blowing to me. I listened to, especially this past week, for some reason it got on my nerves. It was, interest rates, mortgage rates are hurting the housing market, and so that's going to happen. The yield curve is inverted, meaning the 2-year is 100 basis points, 1% higher than the 10-year. The yield curve, whenever it's inverted, means we're going to have a recession. I've been hearing that for 15 months. I don't see a recession. And the stock market doesn't see a recession. And we can go through the whole litany of items that people pull out to look smart or to sound smart. The talking heads on CNBC and elsewhere. Credit card debt is at record highs. The consumer is stretched. Look what Dollar General did. Sorry, if it worked, I'd be all over it. But, the stock market is the best economist there is. The stock market is a discounting mechanism, and it tells you what's coming if you're paying attention. And I'm paying attention, a lot of attention. So let's look at this chart here. This is the S&P 500. Yep, it's the same chart I keep bringing up, but with different lines this time because, that economic argument made a lot of sense. We were in the DMZ, the demilitarized zone, between the 200-day moving average at 395 and this 418 resistance level that you see here. The market has spoken. It's gone to the upside. I wish the volume was heavier on the up days. I'm not going to kid you. But we broke above 418, and it's telling you that things are getting better in the economy. And so you could give me all the headlines and all the Bloomberg articles you want. The market has spoken. We also took out 431, which is a 1-year high. We're 20% off the low if you want to make it, quote, an official bull market. But I implore you to, as soon as you see economists start to fade that whole rationale. And I hear people doing, not only, opining on the U.S. economy, but opining on foreign economies like China. Well, the China reopening isn't as strong as people thought, and so that's going to, cause a decreased demand here in the U.S. I go, just go to the charts, folks. It's all there. It's all there. So I hope I've made my point. And I'm going to stick to what I do. And, I pay attention to economic news because I want to be conversant, but I'm not going to let it dictate I'm going to buy this or sell that because I have this economic view that I think is right and the market is wrong. That's a bad, bad place to be. So next, I'm going to go give you an example, and I think this proves it. This is the Global X MSCI Argentina ETF that we bought on January 12th. 21% lower. It's our biggest percentage winner thus far this year. I wish I had 9 other ones. But the bottom line is you can see this red arrow. This is a clear breakout after a long base on big volume, which is what I'm looking for all the time. And I'm hoping that over these repeated podcasts and videos, you start saying, I see that pattern too, Bakes. And it takes some time. I've been doing this for 25 plus years. It's almost, fight or flight kind of impulse when I see a chart that looks like it wants to see positive change that continues so that we can make money. Then I encourage you to go to the show notes, press on the link to the Economist article, which I recommend the Economist a great deal. It is based in the UK. It gives you a very dispassionate view of the world, and it is very, very global. They have reporters everywhere, and I like having a non-U.S. view of the world to bring to myself and to bring to you. So the Economist is worth every dime, in my opinion. They're not paying me to say that. Although, I'd love to have them sponsor the show, so we'll talk about that. But my point here is the economic news of Argentina is awful. Annual inflation of 114% is pushing Argentina to the right. Patricia Bullrich and Javier Milei are rising in the polls. The annual inflation of 114% is the world's third highest. The share of people who cannot afford basic foodstuffs and services has risen from 30% in 2018 to 43%. Unsurprisingly, the main concern of voters is the economy. It's always the economy everywhere. And it is pushing them to favor politicians who offer radical fixes to their country's economic malaise. Now, I read the whole article, and I'm not just giving you some highlights, but you tell me, if you read that headline, are you saying, without looking at the chart, are you going to say, boy, I'm bullish on Argentina? No, there's nothing good in that. But the market doesn't care because the market's forecasting better times in the future. It just is. And I'm going to go with the market and say it's right until proven otherwise. And I've got a sell button, so I know how to limit the risk. The central bank has printed so much money that the amount of cash in circulation has almost tripled to 3.8 trillion pesos. Again, that's bad economic news as far as I'm concerned, but the market doesn't care. And they're also talking about how that's playing into the political situation. I don't care about politics in the U.S. very much, and I really don't care about politics in Argentina. I do care about making money, and this Global X ETF is working. Now, here's some other things to think about. This is from later on in the article. This year had one of the worst droughts in Argentina's history, wiped out over $22.5 billion worth of soy, corn, and wheat exports, worth 3.2% of GDP. Again, the economists would say that sounds pretty bad, and it is. The harvest is expected to recover next year. Increasing demand for lithium could also help, and recent investments in the world's second-largest field of shale gas in the West could boost energy exports. So I guess my point is the face value economic news is very, very bad, but the market is sniffing out these potential positives in the future, and you got to default to the charts and the market, not the economists. The economists, not the magazine, economists, the folks with bow ties, okay? So I'm not bashing bow ties. I'm bashing them a little. Anyway, please go to the website, stockmarketauthority.com. Please sign up for my free newsletter, and please, as a bonus, check out my how to sell video, which nobody else has out there and nobody else focuses on because I'm looking, and it is still very, very valid. And that's today's top story. Now it's time to check the mailbag.
There's a letter in your mailbox.
You got mail.
This is from my son, Jack. And he's my son, so he gets first crack. Bobby's my oldest. He gets second crack at this. Anyway, Jack texted me. JCI, Johnson Controls, reported early May, strong fiscal second quarter, took up the lower end of guidance and year-end guidance. Advancing digital transformation plays into the decarbonization theme. Nearly 55% drive sustainability, heat pumps, efficient refrigerants, etc. Jack, always love you, and thanks for coming in. He also said I was being vague in a prior episode, which, that's like a big insult to me. So I'm going to be my 2x4 self and say, Jack, this is a hold. And I'm going to just go buy, sell, hold, and give you my rationale in very hard terms. The support is here at 59. You can see this line here that goes back a long ways. I like the fact that the earnings report was greeted warmly with increased volume, as you see here on the lower right arrow. And it's in between this range where resistance is at 69.60. And again, think of 59 as support, that's a floor, and think of 69.60 as resistance. And stocks tend to consolidate between support and resistance. Again, this is a $10 range, give or take. And they spend some time there, and then the market decides, are things getting better? Think this company is undervalued? Should I add to my position, et cetera, et cetera, et cetera. Right now, you're in between. I would watch this carefully to see, especially going into the next earnings report, do you see volume pick up? Do you see a breakout decisively above 69.60? And I like to see volume increase 150% over normal volume. And when I start seeing that, I say, good things are going on, and let's rock and roll. Now, as this plays into this show and future shows, I go charts first, fundamentals second. This is a promising hold chart. I would do the fundamental work and then be ready to rock and roll if the fundamental work confirms the technicals, and then boom, at 69.60, you got something going on. So Johnson Control is a hold, and I hope that's helpful, and I'll see you soon. Hank from Nashville wrote in, what do you think about Ford? And this is a hold. Okay, get that right out of the gate. See what I did there, Jack? No ambiguity. This is also a Share Scoops name that came up in their newsletter, which I also recommend. Gus Christensen is a friend. He's the CEO. He's been on the pod a couple of times. He is People, Planet, Profit is the prism through which he views stocks and the team views stocks. I am more of a cold-hearted capitalist, and I just want to make money. So Ford is a hold. I want to see this continue. Now, I hate this for the people that are being laid off, but they announced layoffs to streamline EV development. And that is a negative, sounds like a negative, but it's a positive for the income statement. So if you have expenses, the SG&A line going down and everything else staying the same, you have earnings going up, and especially if EV is starting to lower their losses and become on a path to profitability, you might have here something. The stock has hit $10 as support a bunch of times and didn't break it. Here we are at 14. The stock is cheap, and we'll see if there's positive change. I love cheap, but I really love cheap coupled with positive change, because cheap stocks can get cheaper and stay cheap for a long, long time. So you want to have something happening to move this along. And unfortunately, maybe these layoffs are the thing that get things going. And then if you hopefully have revenue growth, then the stock is doing. So above 14 and change on big volume, I become interested. But there's clearly a trend change here. The 50-day looks like it wants to take out the 200 to the upside, and the 200 is starting to turn. So I'm a hold on Ford, and I'll come back to me if you have other questions where I can follow up. Kara from San Francisco asked about another car company. Yet it is Tesla. Has Tesla gone too far, too fast? And again, I'm going to default to the market. I don't think so. I think that the extremes from going from 400 plus to 100, bouncing to 200. This is obviously a very controversial name, and the last earnings report was lousy and didn't act well after that. But you can't argue with the stock took out 218, moved higher. And what's really important to me is the 50-day just crossed the 200. Look at that red arrow that you see there. And, that's going to send a lot of bells off in a lot of places. That's called a golden cross. When the 50-day comes up through the 200, it kind of confirms that the long-term trend is starting to turn. And valuation here is always going to be stretched. Let's say they do $5 next year in earnings. This is 50 times with the stock at 250. You're never going to say Tesla's a bargain, but to me, that again, it's a hold, and I would watch the 200-day to make sure it confirms to the upside. I think that's pretty likely. I've given you my fundamental litany of the reasons why I don't like it, but I'm wrong. The market's right, and I don't own it. If you own it, I would say it's a hold, and watch for this consolidation to continue and that 200-day to confirm the uptrend, and then I think I would feel more confident as a holder of the stock. All right, that's it for the mailbag this week. If you want to write into the show with any questions or comments, email me at bakes@stockmarketauthority.com. Even better, leave me a voice recording, and we'll play your questions on the show. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio, and I'll give you this week's Bakes Takes. You're listening to Stock Market Authority. Hang in there. We'll be right back.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
We're back, and today we're talking about economists can't pick stocks. Please learn how to read a damn chart. Now it's time for the Stock Market Authority portfolio. And I'm the only one that does this, and I guess I'm a masochist, but I like to put this to work and see what happens. My goal is to make money every year. I don't care about an index. I don't care about hugging an index. I don't think you care from what I when I talk to you live and via all the social media interactions that I have. And making money every year seems kind of appealing to me. And I hope it is to you. That's my goal. And here's how we're trying to do it. Oh, and by the way, since inception, we've done pretty well. We've made money every year thus far. We were up last year when everybody else was down, and we're beating the hedge funds by 2.37 times since we started, which I think is pretty good. We do go short. We did that last year, the SPACs and the Cathie Wood stocks predominantly, and so I think the hedge funds are the best barometer of how we're doing. So where are we now? We talked last week. I'm 10% in uranium, the junior miners via URNJ, the Sprott junior miners ETF, uranium. And I talked about it. I won't go to all the details, but I just think this is a multi-year trend. The spot price is moving up. We need nuclear to feed the grid for the increased demand of EVs and the electrification of everything. And it's been 11 years since Fukushima and 12 years now. So we're getting ready to rock and roll to the upside, in my opinion. Argentina, we talked about. That's 10% of the portfolio. I'm 50% in technology, AI, cybersecurity, robotics. Importantly, the charts told me to do all this prior to NVIDIA blowing out revenue and earnings expectations and raising guidance significantly and having the stock rip to the upside. So again, the chart sniffed this out and got us into the NVIDIAs of the world in a small way prior to the big moves. We're 10% in Mexico. I'm not dazzled right now. And we're 10% in Bitcoin through the Grayscale Bitcoin Trust, and we're 10% in the Bitcoin miners, and we'll talk about that shortly. We're down for the year. I'm not going to kid you. We're down 15%. It bothers me, the transition from short to getting aggressively into the bull market. We did not do that perfectly, but I'm fighting like hell to make money this year. The market's up 13, and I'm fighting the good fight for all you Triumph fans out there. This is the chart of the Grayscale Bitcoin Trust, GBTC, and this is what I look for all the time. Take a look at this. This is not that far off the low at all. The volume is picking up, and we're taking out new highs with the moving averages confirming this nascent move to the upside, I believe. What I think is driving it is the BlackRock has filed for a Bitcoin spot ETF. They have more lawyers and money than God. And I think they're reading the tea leaves and saying Grayscale is going to win their suit against the SEC. Why in the world, their argument is, why in the world do you approve a Bitcoin futures ETF and you won't let us turn Grayscale Bitcoin Trust into a regular ETF? BlackRock is there with a filing. Fidelity came right after them. Wisdom Tree came after them. And I think the big boys are sniffing blood in the water. I think they know that there's a big advantage to launch rapidly and as early as possible. And having a Bitcoin ETF means there's going to be a lot of funds out there, ETFs, that are going to be getting Bitcoin into their portfolios to meet investor demand. I think it's that simple. I also think the government is still fat and bloated and wasteful and will continue to debase the dollar. And again, the chart is telling me that people care about that now, and it's going to benefit Bitcoin. I think that's how this is going to go down. That's also going to benefit the next chart, the Valkyrie Bitcoin miners, which is WGMI, and this is Marathon and Riot and the public companies that mine Bitcoin. And I simply think that they're going to gather what the ETF spill and have a better time of it as we go forward. And the market is telling me that given what I see here in this chart. So I will go through recent improvements in my newsletters and social media. Please subscribe, follow, and share. That's how we're invested on June 28th. And let's get into this week's Bakes Takes. And my takes are first on Russia. But a few points to make here. I have listened to, I can't tell you, I mean, at least a dozen plus podcasts. I've read everything I can. I've watched the talking heads of CNBC, CNN, et cetera. And I don't really know what to make of the Wagner Group marching to Moscow, turning around, threatening Putin, certainly, and Belarus, somehow brokering a deal where Putin doesn't go after the Wagner leader. It clearly shows Putin's weakness. I don't know how this plays out. Nobody does. But it's also a bookend to, if I had the headline that Putin was going to order Russian troops to invade Ukraine, I wouldn't have known how to invest to benefit from that or how to protect myself. So it's the same thing here. I think it's long-term bullish. I think Putin getting weaker is better. But how this plays out, I really I don't have a feel. I want communism to die a fiery death, and we'll see if this is the domino that leads to that occurring here. So we'll see what happens. I'm watching this. Fire at me anything you have that you think brings some insight here, because I'm fascinated by this as a human, but also as an investor. Next, I want to recommend, and go to the link here, please, and click on Bloomberg's Masters in Business. Barry Ritholtz hosts this. It's terrific every week, in my opinion, sometimes more germane to individual investors like us than others. I think this is really one of the best I've heard. This is Peter Borish, Borish. He was the number 2 guy with Paul Tudor Jones that saw the analog of the 87 crash to 1929, was dramatically short, covered a day or two after the crash, made a tremendous amount of money, and he shares his lessons that he learned there, which I think is absolutely fascinating. In particular, what I like is, because he agrees with me, that when they really made a lot of money is when the technicals and the fundamentals collided in that order. And that's obviously a message that I try to drive home. There's a lot of great things in here in this podcast, and I really recommend it. It's about an hour, and I think it's well spent. I'm going to be talking about my interview sheet in the future, how I would sit down with managements and get to the bottom of things, CEOs and CFOs. I've done this thousands of times. We have a company that we're going to be talking to where I do interview a CEO live, and you can see how I get to what really matters in a quick fashion. The system that I've developed over, I can't believe I'm saying this, 25 years. And I want to hear your feedback if that kind of material is resonating with you and adding value. So those are my Bakes Takes for the week. I always like to end after I talk about the fall of communism and other weighty topics. Give some much-needed levity. And this is Demetri Martin. If you haven't seen him, he's very funny. Mom, dad, clean. I don't think he uses a swear word in this. There might be one or two, but very, very limited. Short jokes. It's sort of his rapid fire of some of his best material, and I think it's great. That's it for today's show. Have a great 4th of July weekend. I'm working on a lot of stuff. Please look at the newsletter. Go to my website, stockmarketauthority.com. Sign up for the free newsletter, and I will see you soon. Take care. God bless. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.